Hey everyone, Nick Inman from VolumeProfileTrader.com on Sunday, August 19th. First things first, I want to say that, the changes that I'm making to the website, they're definitely going to be geared towards getting results, learning the proper way to trade, and that goes from entry to risk management to exits, and really teaching you by showing you what I'm doing. So from now on, you're going to get monthly results that are posted on the website, and you can see the trade itself, the entry day and the exit day, the entry price and the exit price, and then followed by the percentage gain or loss. And the idea is not only to give you trading opportunities so you can make some money, but the idea is by posting the entry day, you can see where I entered the market at. You can see the setup, and I want you to get familiar with those setups so when you see them, you have confidence in taking them. And I also want you to see the exit price, or I should say the exit day, slash price, so you can see. And also, maybe I should add to this, the reason for getting out. And, that kind of gives you an idea of, what I'm thinking about, during the trade and, why I'm exiting or why I'm entering the position. So for first things first, it's just going to be the day, the entry price, exit price percentage. I'd have to go through and see why I exited. So maybe that's, starting from here on out. But I hope you like that. And I think it's going to bring good value to you, turn around your trading or improve it even more, and just continue to make some money. So let's get into the actual weekend update. First things first, the S&P continues its upward climb. And as you can see, the charts are a little bit different, but it's just because I'm trying to get a better resolution. But what you can see is ultimately the amount of volume that was done between 1304 to 1400 was pretty hefty, especially compared to over the past year, the first half of this 52-week period. And you can also see the point of control formed right at the 1363 level. What's funny about that is the market failed against those levels on this retest here. The market failed against these levels. And I'm going to go ahead and count this one. So 1, 2, 3 times it failed. And every time it failed, it was, a good opportunity to basically be short the market on that first reversal day. But then what happens? The market breaks out on 2 pretty good volume days relative to what we've seen, comes back 3 straight days, tests this level, and then gives you a nice U-turn bar up to new highs, or, relative to this period. And you can see we've been having higher lows, higher highs every time, and the trade has continued to work. The trend is definitely to the upside. Now, eventually, that is going to end, whether it's just a shallow pullback, maybe a complete top here, and, you get a double top here at 1420, and we go and test 1278 again. It's, anything's a possibility, of course, but the way it's looking right now, the trend remains up. The only concern is this light volume here, but at the end of the day, you'll get people to speculate on the short side, and they will just help spur a rally higher and higher, especially, the shorts that are still short from these levels. That's what is helping this market, and you have to think on both sides of the trade, and that's what is going to be, that's a useful insight right there. It's just recognizing both sides of the price action, not just looking at the buy side, but looking at the sell side. That should help too. So let's look at an hourly chart really quick. All right, what we can see here is, I'm going to go back, let's just do these whole profiles so you can see what has happened, and you can put it into action, when trading in real time. So looking at, and I'm going to finally get it. All right, looking at this hourly chart, and each one of these volume profiles is 1 month. I want you to focus on a few things. One, the value area levels. So these green lines here and the volume around them. Keep an eye on that. But for right now, we'll just mark off the value area high. Value area low. Okay. And what you can see is not much volume was at the value area low, but up a little bit, we saw a nice big volume patch. And we're going to mark that off too, just so we can, take note. So what we ultimately see here is, a nice little, basically levels to trade off of, or to look for trades. And in that, we're going to be looking at only these 3 levels, these 4 levels, and we're going to use the prior month for the current month. So market on the new month drops below, gaps down below the last month's value area, flush to the downside. Reversal, what happens? We gap up above the value area and keep going. Where do we test? We test these swing highs. We test the top of this high volume area. You see how we punch through? Once we punch through, you're looking for higher prices. You're looking for it to fill some of this value until there's rejection, until the price action tells you it's time to get out. Guess when it's time to get out? When we get a U-turn bar for an exit signal. And sure enough, we get a lower high here on good volume and a continuation to the downside. Now where do we stop? You see this high volume area here? 1 bar. Below, we gap below, and then we recover on pretty good volume here. I'm going to zoom back in. On pretty good volume here, and you get a move to the upside. Then you get a double top at these same levels, back down. So now we're range bound, you get it? So you're looking for higher lows or higher highs here, or lower lows or lower highs. So we get a double bottom, and we retest, and we get our first lower high. So what does that entice? It entices shorts to try to press their bets when they see this lower high here. It also, warrants, buyers, watch out, lower high, let's keep our stops in place. Basically, if it breaches these lows, the momentum's starting to catch to the downside. So what happens the following day? 3 good buying bars in a row. We retest basically this, 50% line. It's probably also the point of control for last month. Pretty close. Point of control for last month, 13.17. And what do you get? You get a nice reversal bar on huge volume to the upside. So you get that? So once we bust out of this high volume area here, we look for the next target. The next target is the value area high. And where does the market go? Directly to value area high. You see a little bit of selling. You get a retest, and it fails. And then the selling bars come in and push it back down to value. So just to speed this process along a bit, you see it comes back, test these levels. You get nice U-turn bars here and a push back to the upside. We bust through the value area high. We gap up to it, and we're in the next month now. We gap up to it. We test it and continue higher. Notice how you don't have to get out on the first, potential sell signal, which wasn't even here, by the way. But when you get the retest, you look for a failed retest and then for it to flush. And that's what you get. Just trying to speed this process along. Price comes back down to this big high volume area here and test it. So you don't have to anticipate the market just to keep going and going. You will get your opportunities for entry. You have to be patient and you have to wait for them to come to you. You got your opportunity here and you saw a move back to the upside. You see the value area for last month. It held. You got a flush. It came back. There was rejection for a little bit, and then what happens? We bust through. We make new highs for the month, relative to these two. We come back, test it again, and then we get just big gapping higher, new highs. We come retest the point of control for the prior month, not the current month, the prior month. And, meaning new month, new move, and there you go, a continuation to the upside. We balance at new highs. Point of control up here. Now we have a higher base to trade off of. Now, when the market comes back down, you're looking for 1400 as a potential test, basically this high volume area here. And you're not, we're looking for price for buyers to hold the uptrend, to continue the uptrend by the weakness philosophy, and let this rally go on for more days, for more weeks. So I kind of hope that helps give you a better idea of what we're looking for in the market. So let's basically go to my positions. First things first, Apple. This is a trade that has continued to work. It looks like we're taking another leg higher, and because we've made new 52-week highs. But what you're seeing is a nice reversal bar consolidation, a push up to these highs. If you mark the ranges here, you can see they did a fairly good job at defining highs and lows. Notice the last low came back to test these levels, and you saw a reversal to the upside. Look at the volume here. You're getting good volume after earnings into support, and you get a push off to the upside, and now we get new highs. So Apple's a name that I didn't buy here at the lows. I was actually involved, buying in these levels here. I don't remember. I probably bought a little bit here too. I completely missed the boat here. But looking at the market, or Apple, I should say, we caught the lows here, and I remember talking about this on videos. Took some profits here. I remember initiating a short here too. Actually, it was here. But missed this long here. I should have had this, but I just neglected it because I saw that they kind of missed on earnings, and I was a bit disappointed. But price action said be long, and I did buy up in this range once it got in here, because I said, if this is support, I basically gave it a line. If this is support, I think I said right under 600, you look for it to hold. If it holds, you ride it higher. And sure enough, it did. It took some profits in the 633 level, I think it was. And, I stayed involved in Apple, and I'm being rewarded for doing so. So as it continues to ride, I take off some risk, and I just keep, moving my stop higher and waiting to get stopped out on Apple. But for now, this continues to work, and I don't see a reason to look to sell all of your position. Bristol Myers, on the other hand, we got our bounce that we were looking for, but I said if it doesn't hold 1370, I think you get out. It didn't hold 1370. So I have two different positions in Bristol Myers. One is short 33 puts, and I bought the 31s or 30s against them, and I collected a nice premium. But the idea was once it rose, I would either take that put spread off, or I'd let it, maybe it goes above 33 and I let it expire worthless. That's something to look forward to, but I still have that position on. But what I did take off were the shares. I had a pretty decent amount of shares, and they got stopped at a break even on Friday. So I'm okay with that. Whatever. It didn't work out, but I didn't lose any money on that trade, so it's all good. ConocoPhillips, we're at the value area high here. I had some short 55 calls against some of my shares. I got called away on that, which is okay, but I'm still riding some ConocoPhillips up because there's no real reason to sell. That was just for me to manage some of my risk. And, it's been a nice move to the upside for ConocoPhillips. All right, Dow Chemicals. I think this is a name that you continue to like just because of the relative strength it's showing right now. Right now we have a higher low here relative to these lows. And last time we got a higher low. Let me get the proper tool. Last time we got a higher low like this, it was a good move to the upside. Last time, this wasn't a higher low. So this not really qualified. This is our next higher low on decent volume, and you're seeing some relative strength. So let's continue to ride this and see if we can make new highs. Our thesis for getting in was this high volume area here from the prior month, the value area here, the value area low, excuse me, right at 29.36. Where was our entry? This bar here, 29.50 or so, was the entry. 29.60. I actually think it was a little higher than that, actually. But now this thing is in profit territory, and what are we long? 30 by 32 call spreads. So we're basically looking for a breakout here, and where would the next target be? You know, this value area high and this point of control for last 2 months ago isn't a bad target. I see we have some volume here, so that's something to look to be, watchful of. However, because we're using options here, you are risking, I think the spread was for 60 cents. You're risking 60 cents to make $2. So your risk reward is more than 3 to 1. And now that the trade is in profit territory, it's up 33% right now. Now the trade's in profit territory. You move your stop to break even on that spread, so you're risking no money, and essentially you can make a potential of $2 off of nothing now that you have no risk in the trade. That's a pretty good bet. So the goal is to get your stop to break even, therefore you have no risk in the trade, and therefore you're either going to get stopped at a break even, worst case, or it's going to trail and you're going to, lock in more and more profits, hit your target, you scale out of some, you scale out of all, that's your choice, and you move on. But you don't make a relationship with these trades. If you get qualified for a trade, you take it, you manage your risk. That's your first goal, is to get your stop to break even. And once you get that, then, if you get stopped and then it keeps going in your favor, then you have to take note of that. Sometimes you can't help it. You're going to get stopped and it's just going to go, maybe you miss the trade. But other times, you'll realize, man, my stop was a little too close. I have to bring that down a little more, give it a little more room to run. And then once it shows me that we're getting a signal that we're going to move higher or try to, then I'm going to move my stop to break even and then, use the trailing stop or however you want to do, to help you in the trades. All right, I loaded the trailing stop for you. So you can see the trailing stop basically has your trade at a break even here. So, I just wanted to show you that and show you, let's get your stop to break even and then continue on with the trade by just managing your risk. That's the easiest part, is just moving that stop up until you get stopped out, or just waiting for your target to get hit. And then if you get an exit bar, you get out. Or you can just exit with a limit. It doesn't matter. But once you get your stop to break even, then it's all good. And if your perception of the market is right, and what I mean by that is if you're buying or selling off of valid levels and you're going, with the trend, you're going to make money. And you're going to see that your trades work out and they give you good runs. And that's what you want to look for. So, look for when the market, do this in hindsight. Look at a chart, a 1 hour chart using our setup, and look at where the entries are and look at them versus the prior month's volume profile. And you will see there are very good setups against, nice volume levels on an hourly chart. And there's probably, 4, 5, 6 solid setups a month that you can make great money off of. And remember, if your goal's to get to break even, you can see that those trades give you a nice risk reward once that trade is in break even, or once that stop gets to break even, then the reward is unlimited. So if you're taking valid setups, you're going to get stopped sometimes. Sometimes it just doesn't work out. See my Freeport trade 2 days ago. It just didn't work out. I got out, and guess what? I got back in. And the reason why is because I want to manage risk. But, let's show you why. Freeport McMoran. What are we doing here? First of all, the value area from April has done a fairly good job of being resistance. One time here, and I know it's hard to see this, but just go with me. One time here, you can see price flush. One time here, price flush. Then we get above. But what happened? You would expect that level to be support, right? It didn't support. We actually faded this move, got short on this bar here, and literally covered the position near the lows. And the thesis was that this trade isn't working out, so we may see some more. I should say the breakout isn't working out, so we may see some more downside. So what I do at the close yesterday, I tried to fade this move against the current month's point of control. And the only thesis I had was, this level's going to be some resistance. Maybe we get some selling into Friday, some profit taking, and Freeport rolls over and gives us a nice trade back down to 34.50 or so. That didn't happen. We gapped up immediately. I took my loss on this short immediately once it made new highs, and I re-entered the position on the next bar. And now my thesis is, okay, I'll keep my stop at 35.80 or so. I'm risking about 1%, and I look for potential lower prices on Freeport. And the way it traded towards the end of the day, we didn't rally or anything, so it shows me, it gives me a little bit of confidence. Maybe I can get my stop a little bit lower if we open lower on Monday, and I can take advantage of getting my stop on Freeport to break even. And if I get stopped at break even, I don't really care because this is a bit aggressive. All I'm looking for is relative weakness in Freeport. If the market balances it all, I'd look for Freeport to come in. And, that's my thesis on the trade. Whether it happens or not, I'm not really sure. We'll find out in the next couple of days, but I don't think it's a bad bet. Also, the Qs, 68 by 67 put spreads, trading for like between 25 and 30 cents on Friday, and that's for expiring this week, this coming Friday. So all I would be looking for is a potential retracement. It protects me in case the market, corrects this week and you see a little bit of downside pressure. What it'll do is, paying 25 to 30 cents, you can essentially quadruple or triple your money in 5 days if the market comes in. If it doesn't, you take a cheap shot, only 25 to 30 cents, to potentially triple your money on a potential correction. All it is a hedge against a net long portfolio, and you're risking not a lot of money to do so. So I think that is something that can work out in your favor. Las Vegas Sands. Look at the relationship that's going on here. Point of control for last month, this huge high volume area here. What happened? What happened here? Price made a low, and we see this in hindsight. The following month comes, you get a nice reversal off of these levels. Price comes up, pushes above this point of control level. So this isn't resistance. So what should it be? It should be support. What happens? We get a great breakout bar here, 9 o'clock on Wednesday, 9:30. And that's when we get long. What do? We buy the 40 right at this breakout level, by 42 call spread. So basically up to last month's value area high, and you look for a potential, fill there. This trade costs us, I think, 75 cents. So you can make $2 off 75 cents. That's almost the ability to triple your money by September expiration. And you're looking for basically Las Vegas Sands to rise above 42 or stay in this range, stay strong, for the next week or two, and I'm sure you'll have a chance to double your money. This trade got as high as, I think it was worth 60%. It was up 60% at the highs here on Friday. Came in a little bit, but we're still showing strength. Our stop should be just above break even or something along those lines, and we kind of go from there and hope that this trade works. But realize that you're already, you have nice gains in this. Right now, probably sitting at 40-50%. So you can't complain about that at all. All right, gold. I'm still thinking that this could be a breakout moment for gold. We'll have to wait and see, of course. But if you do see a break above 1630, I think that's a chance to be net long gold with a chance for another 40, 50, $60 of potential upside. That's not a bad move, especially if you use some options. But what has happened here, we've broke out from, let's first make it clear. Let's do it like this. All right, you have had an inside month for 3 months, for 2 months in a row. This was the high, then you have lower highs. These are the lows, and you have higher lows. And let's see, it was June. So these lows have marked the lows. These highs have marked the highs. Both the high and low in June have been the highs for the last 2 months. We're going to see a breakout soon. What are we getting here? We're getting higher lows pressing up against these highs and this point of control for the year right at this 1620 level. Please do not take gold off your radar. It looks like this thing wants to go higher. GLD, just trading right at its point of control for the year. This thing wants to go higher. If you want to participate in this, buy the 157, buy 161 or 160 call spreads expiring in September. And I'm sure you'll be paid off for taking on this risk. However, this is the way I see it as far as managing your risk. All right, on the gold futures, and because this is what I watch, if it trades back down to basically the reversion to the mean, 1612 or so, reevaluate the trade, get less net long, and wait for your entry bar again. But if this base holds, and this is just a higher low here, and this huge buying bar holds, then I think it's safe to say you can look for higher prices on gold. It's at its point of control for the year, point of control for the last 90 days. We are making higher lows, and now the trend has steepened. We're making lower highs / flat highs. Point of control right here. We're going to get a move from these levels pretty soon. And I think it's going to be an upside breakout just because I don't think there's a reason for gold to go any lower than it currently is. Of course, I could be wrong, but we'll just have to wait and see. But I do think I did get more long gold by selling some of my hedge on Friday. So I'm prepared for more of an upside breakout. I will probably look at call spreads this week on the GLD. All right, I already did Dow, ConocoPhillips, Las Vegas. Silver kind of goes with the gold theme. We'll see if this wants to break out. The only thing I own are some SLV leaps. So, all right, Euro. Just keep an eye on these levels. I think we talked about 123 being a level that you want to see supported. That was just last month. High volume area. What has happened? We've been supporting these levels. We've gotten lower high. We're failing against this current month's value area. It's also this swing high from last month. We're seeing resistance here, but as long as these lows hold, you're okay. But it's gonna come to fruition pretty soon. So we'll have to wait and see. Let's see if we can get more of a hint on the dollar. Holding its point of control for the month, kind of holding last month's value area. Those levels kind of go hand in hand right now. If we break out of this level, look for a push back up towards 83.50. However, as long as these highs hold, I think you can remain looking to the downside, with the potential for new lows. We'll have to wait and see, but your target would be down to 81.45. Let's call it 81.50. Let's make it easy. So that would be a decent down move for the dollar, a decent up move for probably equities and the euro. I just want to show you a few examples. Home Depot, You can see on the breakout month, we made new highs relative to this move. Yeah, relative total. What do we come back and test? The point of control for the prior month, and then we continue higher. We see the breakout. On a yearly chart, we get a shift. The point of control is formed up at this 51.5 level. And what happens? At the end of this move, before we break out, price holds that level. We don't dip back below it, and then we break out. So those are some things that you want to take note of. Similarly, IBM came down to these levels, see the reversal, but you see the big high volume area here. What happens to show you that we're going to move higher? Price holds these levels, and then you see a continuation to the upside. So, I mean, theoretically, if you only look for stuff like this, you're going to have a high win percentage. And even if when you learn and you can recognize reversals, even if you don't make good returns percentage-wise, let's say you just take a quick scalp, and I'm just using this for an example, your win percentage is so high by taking these high probability trades that it doesn't matter as much. And, I'm not saying that these are the only trades to take and these are the only setups, but when, last month's value area high, when you're getting valid buying bars off of these levels, this is easy stuff. And you just have to remain patient, stick with the current trend, lower highs, breakout here, off of the current month's point of control, higher lows off the value area, and then a breakout. So this is, stuff where, just for example, you buy, this isn't a good example because it trades in $5 increments or $5 increments. Let's say you bought the 200 by 205 call spread expiring in 2 weeks or so on IBM. Let's say you could go out that far. Let's say you did this on Thursday, so you could have bought next week's expiring the 24th this week. You could have bought those call spread for probably pretty cheap, probably $1.50 or so, and that would probably be worth $3 right now. And so you double your money just like that, instead of just getting 2 or 3% from a vertical move on IBM. You're doubling your money, and that's the kind of stuff that you can look for and you can really take advantage of. And that's what I want you to do. So make sure you check out the results for the trading, because I think that will give you some confidence that what we're doing here is really working. And then, decide if this is for you. And if it is, welcome aboard. If it's not, then that's okay. There are many ways to trade. This is just one. It's an accurate one. It shows you what only really matters, more objective versus subjective, and I think that's the most important thing. So anyways, take care, have a good rest of your weekend, and I'll talk to you tomorrow.